The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, start out the show. I'm totally shocked. One of our listeners here at TFNN informed us that Mark Mobius was let go at Templeton. That is a total shock to me. This guy had built that company. Emerging markets says better than anybody, and he came out, I guess, on TV the other day and said it wasn't time to buy Chinese stock. They were going to go lower, and 2 days later, he's out on the street. Now, somebody will pick him up because he knows Asia and the emerging markets better than anyone, and he works extremely hard. He's a very nice fellow. Very hard to understand how that happens, but not really. Things like that happen in the corporate world. Speaking of the corporate world, the first chart that I posted in here was a chart of Starbucks stock versus the price of coffee. And as you know, that CNBC always says how benevolent Starbucks is, and now you can see why. They just raised prices again 8% on their coffee, and that's to make up for the rising prices of coffee. As you can see, they've been coming down rapidly now for the last 3 years. So we'll see happen. Now, we've got a situation in coffee. If you like to trade coffee, there's a double bottom butterfly that just occurred back at 124. We're up around 129 right now. So if you trade coffee, try to buy it on a pullback down to 125. Put a stop below 123. I do not trade coffee. I have not traded coffee in 50 years, and it will be another 150 years before I trade coffee. I had a bad experience. I was long coffee back in 74, and the market was limit up, and I told my broker to sell the 5 contracts that I had, and he came back and he gave me a fill limit down. And we were on a squawk box at Conti Commodity at the time, and the broker screamed at me, and they were limit down, and he said, "Do you want the fill or not?" Well, when he said that, I knew that I better take the fill because, and they didn't trade for 3 or 4 more days after that. But after that experience, I have not traded coffee since that time. It's one of the coffee and orange juice are the two that are, there's so many of them, and we got what I forget how many things there's that we're able to trade, but those are the things that we don't want to mention. So anyway, that was the pattern. We have been coming down quite a bit in coffee. I want to cover one other thing. One of our listeners that is a big fan of Rich Anderson. As you know, Rich was on. He'll be on tomorrow, by the way. Rich has been talking to us about the cattle market, and being a cattle rancher himself, he certainly knows it spot on. And we have been talking about the August cattle being bearish when they were up around 151. Now we are 5 handles under that at 146, and we're heading down to 144. But Rich will be our guest at the half hour tomorrow. I was going to have Bill Meridian on today, but Bill is tied up. He's got a meeting in Vienna, so he's going to be our guest on Thursday. So we'll take a look at that, and I think we're going to have a surprise guest on Friday. I've got my request out. I just haven't heard back yet, and as soon as I do, I will let you folks know if that's what's happening. So that's the coffee. That's the cattle. And so what we'll do now is we'll move into the stocks. I wanted to start out with the, because we're going to be opening here really soon, and we're going to have a real interesting opening today. I'm going to start out with the New York Stock Exchange Index. That's the one that I believe is most representative of the stocks. I know you get tired of me hearing that, but that's the case. So we'll put this up here, let you take a look. You'll see that the New York Stock Exchange Index has not taken out the high of the gap area from June the 29th yet. That should do it this morning. It's only a few pennies away. As a matter of fact, it's 10 cents away from where it closed, so we could very easily do that into the gap area. Now, that itself is important because we did go below the March lows. That is very important. We're having a snapback 4-day rally, which is normal. Now, if we take a look at the cash S&P index, and remember, this is all technical stuff, folks. This has nothing to do with fundamentals or anything related to supply demand stuff that you hear on the old tube. So we'll see. But here is the cash S&P is even, and it's got a huge gap when we know most gaps are filled. So we'll take a look here at the cash S&P here. That's a little bit higher. That would be 4 or 5 points higher in the S&P. So we're very, very close to a 61% retracement off of that high. Now, if we get really strong the remainder of this week, because we should be topping either today, tomorrow, or Thursday. I know it's a 3-day window, but you got to give it a little bit of time because these things are so crazy with all the news that comes out. The markets respond to this news, even though some of it doesn't mean a lot, but that's the way it goes. I mean, Puerto Rico came in and begged the banks not to foreclose on their $72 billion in loans, and what did Greece only wanted $54 billion. So I mean, there's a lot of people out there with a lot of debt, and that's going to start coming home to roost, and it already has in the bond market, and it's going to get worse. It's just a question of when. I don't think the Fed rate will probably be a catalyst of some kind, but you know, the market has been telling you for a long time that interest rates are going higher, folks. That's that's the bottom line of, what we're looking at it. Okay, now let's take a quick look here at the E-mini S&P here, so we can look at it on a retracement level basis that we're watching here. Let me give me a second here to get this up. You'll see the big ABCD pattern that we made back on the 5th, and we came within a half a point yesterday of the exact 61% retracement in the S&P. That came in at 2096. We got to 2095 and 2094.75. So we were very, very close. Whether that'll get there today, it should without too much trouble, I would think. But we are in the midst of this is the 6th day of the rally. Actually, it's the 7th day of the rally that started on the 5th of July. And now we're, rallying up into that. The NASDAQ has still got a little bit farther to go for it to make a 786 retracement. It's been the strongest of the group, as it has been all along. But it's also, give me 1 second here to move this around so that we can all see it really clearly. The thing is that the NASDAQ absolutely massacred the gap. I mean, it just... it went through the gap like, a Grant took Richmond. And for those of you that like the Confederate flag, that was Ulysses S. Grant. And that was Richmond, Virginia, back in the days of the Civil War. But as you can see here, we do have a 786 retracement, a little bit higher in the NASDAQ. And we'll see if that's it. The NASDAQ is basically the stock market on steroids, folks. And... it's got all those high-priced stocks like Netflix and Amazon. And believe me, boy, there are some really strong stocks out there. I mean, you take a look at Amazon and you take a look at Netflix is still pretty strong. Disney is strong. Starbucks is strong. I mean, there's some stocks out there that literally have, taken the bull by the horns and, pulled him down the alley when the rest of the market sold off. Those couldn't. That doesn't mean they can't turn down, but that's just what's happened during this this particular time frame that we're watching right here with the stock. So the overall stock market with the S&P 500 cash, the S&P futures, and the New York Stock Exchange Index and the Dow Jones are all telling us that this is nothing more than a short covering rally, even though it's a monster one, as we could tell by the the advanced decline line took out the February highs. That just means that you had a whole lot of issues advancing that day versus declining. I think it was 9-to-1 or something, or some ridiculous amount, and that took that index up into new high ground, which made it basically overbought. It still does not change the fact that over the past month there's been a whole lot of stock being sold versus a whole lot of stock being bought. One day does not make it, and especially when the day was a relatively lower volume. So that's the kind of things that I'm looking at. But this is it, for me. The next 48 hours are going to say whether we're going to roll over or we're going to run up and try the highs, one more time. We'll have to wait and see if that is going to happen. It's still a little early, but it certainly could happen without too much trouble at all. I've had a request to show to show Amazon that I just mentioned. If you'll give me 1 second, I will put that up here, and you'll see that this is a very bullish stock. We broke out and gapped above the old highs, which in itself is quite a bit, and it's even stronger today. It's up another $3 or $4 today. So this is one of those stocks that just literally wants to, it's trading up at 462 today, and it closed at 455 yesterday. So it's making a 1.27, 1.6, it's actually 1.618 expansion of the range from May through June. So then there's not much else up there, because, you know, this stock is just literally been going bonkers to the upside. It had a beautiful, we'll just look at it a little bit farther here on an ABCD format here. Let me see if I can make this a little bigger so we can see it better. There we go. Hold on, I think we got a break coming up here pretty soon. Okay, anyway, we'll see what happens with this. The question that someone had was these next few days are related to smaller aspects that are occurring, and then with the new moon that happens on the 16th, it all sort of comes together today, tomorrow, and Thursday. Now remember that the new moon has a 2-day window on either side, because that could easily start today, you know, or it might not start until Friday. If the market's really strong this week and blows out all of these numbers to the upside, it's really difficult to stay short. But folks, we hit such a big number in that S&P back on on May 19th, when we hit that 213.88. That was the 1.618 expansion from 2009 to 2007. And if it breaks that, boy, that's we could go up, you know. And given the way the things are in the world, that could you know, still be, but we'll wait and see. As far as China, you know, we had a 3-day rally. It ended early last night. The Chinese market was up a little bit and then sold off to be down on the day. So it did have a 3-day rally. Now, we've had two people come on, the former Prime Minister of Australia come on and say that there's nothing wrong with China. The Chinese government is going to hold everything up, and it's free to buy stocks, as has Goldman Sachs came in on Friday, I believe, and said that it was time to buy Chinese stocks, even though it's really difficult to buy Chinese stocks. The only way you can do it is usually through that FXI, and we will talk more about that when we get back from the break. 10 minutes to the opening, and we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I've posted into Tiger TV the chart for the FXI. And as you can see, we've had the big break where $4 trillion was lost by the Chinese folks. And remember, there's only 100 million stock traders over there as opposed to 1.6 billion population. And so it's a very small percentage of the economy, not like what it is in real estate over there. But the Chinese government is trying to prop it up. They've changed the mortgage brokerage loans so that they can loan more if they need to, and they've also come in and put in money to support the market. But I mean, $4 trillion in losses. I mean, that's a pretty big number. And frankly, when markets are trying to be propped up, that usually does not happen very often, and it doesn't work very well. This was tried in 1929 by the J.P. Morgan Group. There were a whole bunch of people. There was Morgan and Gould and Vanderbilt and a couple other guys, Rockefeller, that were trying to keep the market propped up. But when it started to fall, I think Morgan was the first one to cry uncle. And once he did, the rest of the people said, I'm not going to stand in the way. And then, of course, the market went to where it's supposed to go anyway. That's the function of markets, is to find places where they're supposed to go up and down. So we've had a strong 3-day rally in the Chinese market. It's 12% off the bottom. But the problem is that half of the stocks over there are still restricted from trading. because they were afraid they would go down more, and yet when the market rallied, they were not able to rally. So that's it. The old adage, folks, is from old Bernard Baruch, one of the smartest minds in the world, the financial mind behind Herbert Hoover, who tried to tell Hoover how to get out of the Depression, but he wouldn't listen to him. And that is, he says, the worst thing in the world is it's better to be out of a market wishing you were in than in a market wishing you were out. And that's what's happening to the Chinese people right now. They're stuck between a proverbial rock and a hard place because some of them don't have a choice. The stocks that they have, they can't do it. And the people that work for these companies that own stock are restricted for the next 6 months of selling it. So this is not a normal liquid market. And this is what the former Prime Minister of Australia was saying. And because of that, he said it's not going to crash. That's certainly possible because, we've not had a situation like this. But $4 trillion is not easy to get back. Sometimes it takes 3 or 4 days to make $3 or $4 trillion. So just remember that's a little bit different. The only participation that you can have is if you buy Hong Kong H shares, which they used to be convertible into A shares into Shanghai, but they've changed the rules over there. But, it's pretty difficult for foreigners to get involved, with these things. But we'll see how the market responds to it. My guess is there's going to be a spot where somebody yells uncle again, and it'll have another leg down. I mean, went up 120%. And remember, a market that can give you 120% can take 120% away from you. So just be careful if you're involved over there. And we'll see. You have to be careful everywhere these days because there's so much government intervention with the interest rates and quantitative easing that it's really difficult to figure this out. Okay, we're going to switch gears here before the next break, and we're going to talk a little bit about the euro because we've had a sell-off, of course, after the talking about the Greece thing, which I think is becoming more and more news, but there's another vote coming out. Whether that'll have anything to do with it or not, I'm not sure, but I don't think the problem is with Greece anyway. I believe the problem is with the United States debt and also with the debt that we have and the speculation that we have going on in China. Remember, the Chinese debt has gone from $2 trillion in 2000 to $28 trillion in 2014, and that's a big increase. I mean, you're talking trillions, folks. That's the bottom line. So with the euro, we should have some resistance up here at this 113 level. Whether we get to that level or not, remains to be seen. But it should be in an area where we come into some type of resistance, and we'll be watching that pretty soon. 877-927-6648. We're going to, when we come back from the break here, which will be coming very shortly, and the stock market will be opening, we'll see how much we're going to be higher, and then we will see if the status of gold and silver, where we stand there, and we also want to take a look at the bonds. And we also want to take a look at the crude oil market. So we'll take a little break here to pay a few bills for Tom. The stock market will be opening here, and we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've had a request to talk about ETFs, which is not one of my favorite subjects, but I will give you my 2 cents worth. Let me stand up on my soapbox here. Okay, all right. Put the guardrails up. All right, as you can see, the blue line is September corn. The ETF is CORN, which you wouldn't believe this, but that's the ETF for corn. And as you'll notice, the ETF has not even taken out the highs from December. It barely went up to the 786 of that level, whereas we've made a huge ABCD in September corn. That's one of the disadvantages of these vehicles that they have, is because they appear to be supposed to be following, what the market is doing, which they do, but you can see that the variation here can be really, really quite a bit. So you have to understand them a little bit better than I do. I stay away from them. The only ones that I sort of watch are gold, and I watch GLD and SLV because they're so huge, and they do track really well, but they leave the gaps on the charts that make it a little more difficult. So we'll keep that in mind if you trade the ETFs. I remember what Warren Buffett said. He thought they were a part of the arsenal for the weapons of mass destruction, because we have so many things. We have options on options and futures on options, and so many different things now where the leverage is extremely overbought. So you've got to be able to understand that this is how this thing works out, on a longer term basis. We're almost up to the 786 now in the NASDAQ here this morning. I believe that comes in around 1410, as I recall. Just give me a second here to, yeah, it is, 1410, 4510. So we're very, very close to that being hit. You'll see here the equal moves that we've had. I've posted those in here so you can see what's happening here, with the NASDAQ. But at 4510, that's where we come into a big spot where there should be some pretty good resistance. And we're in a 5-day run. This is what happened back on June 15th. The market rallied for 5 days. It went from 43.81 up to 45.50. This time we went from 43.29, and we're almost at 45.10 right now. So that's what it appears is happening now, with the NASDAQ. And we are due to turn here over the next few days, just because of these cycles that we have. But like I mentioned, it could be today, it could be tomorrow, it could be as long as Thursday, because they have a thing. Is the thing that would really be, if the Dow is up more than 200 points in any one of these days, this is telling us that what Larry's looking at has got flaws written all over it. So that's what you've got to be really careful with. So keep that in mind, because markets are seldom wrong, men are often wrong. So keep that in your old bailiwick to let people know what's happening with it. So we just hit 4,500 now in the NASDAQ. We're almost at 4510. My beeper will go off pretty soon. What I want to do now is I want to see our New York Stock Exchange Index should be opening higher. Hasn't opened as of yet because it's still too early. And the cash S&P should be opening now. Also, both of those are very, very close, to the 61% retracements. And I believe, those are, we're almost there in the NASDAQ, folks. We only got a few more points to go, and we'll be at 45.10, another 8 points, which is a heartbeat in that move. Okay, we're almost at the 618 in the cash S&P. We got a little bit more to go, about another 20 or 30 cents we should make while we're on the air here. We'll just put it up here, and I'll show you the opening, and we'll keep an eye on this as I've got the beeper on, so that when it hits, I want to see what's happening, with that situation going on in stocks, because this is a 5-day rally now. It's certainly completed the 5th day. It's 6 days in the S&P, and it is 5 days in the New York Stock Exchange Index. And so we'll see if this is going to be the case to look at what's happening with these things. So we'll be watching it very, very closely. Okay, let's move on to gold and silver, and we'll just give me 1 second. Let's do crude oil first, because I think crude oil is an interesting one, and it's right here in front of me, which makes my job a whole lot easier. This is just an hour, a 30-minute chart over the past few days. Gives you a good idea that we've been in a downtrend for quite some time. The market was down quite a bit earlier this morning. We got down to $51 a barrel because of the deal with Iran, and that said there's going to be a lot of oil coming on. And then a guy came out and said, yes, but that's not going to happen for 9 months. And so the market rallied $2 a barrel right up to the 786 of yesterday's high. And if you'll notice that we have some equal moves that could get oil up to 52.74, about $1 from where it is right now. But frankly, it's going to have a hard time at that point, because the trend is sharply lower in oil, as it is in gasoline futures that we talked about before, and also in the heating oil. The only member of the complex for energy that has been doing pretty good has been natural gas. That has been in a really strong move, and it continues to make new highs, which I know makes some of the folks here in the Tiger Den very, very happy, because some of those folks have been long that natural gas. We'll just take a quick look here at the natural gas contract, and then we will see what we have here. That's NG. Okay, and you'll see that we've had a nice run here. We're up again today, so that's a good thing. Hold on just a second here. And there we go. If you have any questions, it's 877-927-6648. Now, we need to get natural gas above $3 per cubic foot, and then it's got a pretty good chance to have a little bit larger run, but right now it's still strong. We're in the fourth day of a rally here, so it would not be unusual for the market to back off a little bit from that point. So we will want to be watching it. All right, let's move over to the gold and the silver. Okay, give me a second here. It's really strange because the cash S&P after opening a little bit higher has actually come down now to be down on the day. That's a very strange phenomenon. It didn't quite make it. All right, first one we're going to take a look at here is the silver. And just give me a second here. I would like to give you my 2 cents worth here, and of course that's what it is. But I'm going to do two things. First, I'm going to do is show the silver on the daily chart. Okay, that's the main thing that I would like to do. And then I'm going to go down and break it down to a 4-hour chart so you can see, what I'm looking at as far as a entry spot here, because I do want to buy the silver, and I'll show you what it is right now. And I'll move this out of the way. There we go. Okay, here we come. Here comes silver. I'm going to do a 1-hour chart because I've already got it prepared, and I wanted to show you what I'm looking at here now. You see is we got silver at 1540 right now. We had a low today at 1523, and so my objective is to buy the silver down around 1510. That would be equivalent to gold probably down around that level that we're looking at, which is 1140 to 1135. But remember, these things jump around quite a bit. The silver chart, remember Sunday night, jumped up 40 cents in a matter of seconds. I don't know who did that trade, but I'm sure they're feeling a little foolish unless they were picking somebody off, and that happens occasionally. But if we look at this silver really closely here, given what's happened over these highs these last few days, we're going to have a nice little Gartley pattern set up at the 61% retracement there at 1510. I'll put this in so you can see it. In fact, let me blow it up so we can see it a little better here, since we're all friends. We don't have to worry about any strangers coming in here, and you'll be able to see it easily enough. And there we go. And you'll see at 1510, we're going to have a pretty good low-risk trade, I think, in silver. And we would be buying it at the 61% retracement. You'd have to stop it. Unfortunately, I don't know how you can trade silver for less than 30 cents these days. So you'd have to put your stop below the 786 at around the 1480. They do have a okay, I think we got my beepers going off. Okay, the S&P cash has now hit the 61% retracement. We just hit it just a few minutes ago, and so the beeper just went off. It only went off once, but that means that it's just getting the trade ready. So we'll see if that is going to happen. And now let's double check. I want to see the New York Stock Exchange Index. And let's see, it has not opened as yet. No, it hasn't opened yet. It's going to, I guess it trades the first 15 minutes, so it'll open here pretty soon. And with the markets higher, I don't think there's any question that we're going to see a higher opening in this without any trouble at all. So that's what we're looking at in the silver market. So we want to be watching that really, really closely at the same time that we're watching all the other little things that we watch. And believe me, there's a lot of them sometimes. Okay, now our NASDAQ got to 4503, and there we go. Hold on a second. We're getting a little alert here that we've got some price levels being hit, and I want to be able to turn my limit minder off here. And we have reached the we did hit the we hit it exactly too. Wow. Cash S&P, I don't know if it means anything or not, but hit the exact S&P, right on the spot point so far. That don't mean it can't go a lot higher, but at 210.05 is what we were looking at. So we'll keep an eye on what we're watching here on some of these other things here. Okay, now we want to get to the gold market, and that'll just take 1 second here. Maybe a little bit longer than 1 second. Here we go. First, we'll do the shorter term version, and then I'll do the longer term version. All we've had this morning so far is just a little tiny bounce, $7 or $8, well, $9 off the bottom. But if we take a look at the gold on a little bit longer time frame, as you can see, we've been waiting patiently for this longer term ABCD pattern to form, and that comes in at around the 1137 to 1135 level, which would take out the lows of last March, which would not be unusual, but then we would still be able to have a chance to be able to get it. The currencies I've covered the gold, the euro, but there is another currency that is on our watch list that looks real interesting, and that is the there we got the, now we've gone above the 618 now in the cash S&P, so maybe this is going to be, we just hit the cash, we just hit the futures number just now. So we'll be watching that. So anyway, here's I want to put up the daily chart for the Canadian dollar, and this going back over the past 6 or 7 months, and you'll see here that let me blow it up a little bit so you can see it a little bit better. There we go, and you'll see that we're completing a big ABCD here in the Canadian dollar, and we'll see what's going on. Okay. All right. The question that I have is that someone asked me, why am I, looking to be a buyer of silver when I think these commodity prices are going lower? And that is, I'm looking for a swing trade in silver. It's been acting better than gold these last few weeks, which is good. And so we'd like to see if that's going to, continue to be the case. But frankly, we just have to wait and see what's going on, with all of these things, and that'll give us a little bit better idea of, what we're watching here. So we want to keep all those things in mind as we look at some of these things. But the Canadian dollar has completed a perfect ABCD pattern up here at 128.13. That was the high, 128.13. The high that we made back in March was 128.32, and the high we made back in February was 128.13 also. And so we do have a potential for a triple top up in here, and so far today we have a shooting star pattern has formed. In other words, we made the high early in the morning and we started to sell off. If we should happen to get below the low that we made yesterday, which would be at 126.60, we'd be looking at an outside day with a shooting star. And the last time we had one of those was way back in March when it topped, and it went from 128 down to 119. It dropped $9,000 in a period of 6 weeks. So whether this is going to be the case or not, I don't know. But you've got a lot of things saying that there's some stiff resistance here in the Canadian dollar up here at this 128 level, because we've hit it 3 times now in the past 6 months, and if it was really good, it would go popping through. We got to take a little break here. We're going to come back. We're going to take a look at the Dow Jones and then also Treasury bonds.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I've been asked to take a look at soybeans. We had that big bottom form on June 16th, down at around $9 a bushel. We rallied back up to $10.40 a bushel in November beans. We made a higher high yesterday than we did the previous week, and there was a little divergence happening at that time. If we take a look at August soybeans, which is the spot month for soybeans now, I'll post this up to let you see that we did not make a new high in the August, which is the nearby contract. That's old crop soybeans. New crop soybeans are November, so there is a difference between that, but this is an indication that we might have run into some pretty stiff resistance up here, because we did take out the highs of July the 1st on November beans by just 2 cents, but we did not do that in the July, and now July has sold off about 20 cents a bushel, not very much from that level at all. So that's what it looks like in the bean market. We want to watch for a correction here because there's going to be some other crop scares, I'm sure, before we harvest these puppies sometime into late October, and then we'll see what happens from that point. But that's how it looks right now in the soybean complex itself. We have not quite hit our number yet in the NASDAQ. We're very, very close to it. We'll see how close did we get here. Let's just double check it here, and we'll see where we are. Windows, tile, vertical, and then we'll see where we are. Well, we're within about 5 points in the NASDAQ, so keep an eye on 45.10 in the NASDAQ, folks. That's been the leader of the pack the whole way up. So that's basically, now what really surprises me today, folks, is the New York Stock Exchange Index that I posted. I put it into the room here. It basically opened unchanged. It's now up a little bit. It has finally, got into the area that we were talking about, that gap area from the 29th. And, but frankly, it has not even got into that yet. I mean, I don't understand this. We've got the Dow Jones is up over 100 or pretty close. The NASDAQ is up, S&P is up, yet the overall stock market is not up. Go figure it out. Anyway, that's it, boys and girls. Live every day in an attitude of gratitude, and may God bless.